Good morning, this is John Piper with the weekend video clip, and it's Saturday the 19th of July. I'm looking here at an hourly chart of FTSE, discuss the impulsive decline. We then got this possible 5-wave advance, which could be the start of something, a more important rally. We've now got an ABC decline here. So right now it looks like we're in fact going up, and any move, well, acceptance above 6.8 would suggest we're going to see new highs on FTSE. So the opportunity next week maybe would be to buy the market, depending on as long as 6-7 holds. That's the key support level. So I'll be looking at a kind of buying spike come Monday morning. Look at the DAX now. Well, the DAX looks nowhere near as positive. We again have this quite sharp decline. Then have a possible 5 waves, but far less aggressive than on FTSE. In fact, with the extended 5th wave, it looks more like an ABC, A, B, C. Also, it terminated bang on the Fibonacci 61.8% level. More impulsive decline, very weak action on Friday, suggesting that it may just be corrective. So different call on the market there. This is the Dow 5-minute chart. Dow supports a more positive interpretation. ABC decline here, so that's a positive for the markets. ABCs tend to mean that the trend remains up, whereas a 5 waves down can mean it has turned down. And fairly good action yesterday. Nice opening burst, nice 3rd wave, 4, 5. So we could see a bit of weakness to correct that coming in early next week. But again, a buying opportunity looks favourite. So looking at these 3 markets, the DAX is a little bit out of step. That could quickly change if we see some decent action come next week. Okay, looking at gold now, this is the hourly chart. I mentioned the 5-wave decline that we've seen and said it was time for a rally, which we have now also seen with a solid move up on the airline disaster. It looks like this could easily be the B wave I was talking about, so a C wave decline now back below here remains on the cards. Still got these 5 waves up here, 1, 2, 3, 4, and then a 5th wave. So a retest down to 1240 is actually possible, i.e. the lows here. But what we're looking for again is some kind of solid bounce coming in. Currently, I mean, obviously we've got the A there. So once the C is roughly equivalent to the A, and this first fall here is around $50 thereabouts, so another $50 down to around 75 or thereabouts is one possible target for this move. And I say we're looking for some kind of buying spike or some indication that the thing is at some kind of bottom. So again, as I've been saying, a move, some kind of buying spike below 1300 would be the ideal opportunity to buy this market. It's still looking good. We've still got this possible topping process in equities. No sign that they're actually seeing the peak yet, but it looks like it should be fairly close. And once that comes in, then gold should be set for, well, a decent bull market, possibly seeing new highs. Here's a weekly chart of gold. We had this large move up into that. Now we had this big A triangle, B, now this C wave down to here, with this possible base building from it's not given it's base building. We might in fact see one more decline if this turns out to be a triangle. I mean, I'm talking about the longer term position here. If that turns out to be a triangle, then we could see another bit down. But right now the positives seem to hold sway, and clearly clearly that's the case. Then we've got a major correction here, as long as it doesn't go any lower. And that could give us a very solid move above 2000. So it certainly could be a big call, which would be the least of it really. And I say the opportunity may be coming in the next week or two now. It'll be very interesting to see how that pans out. That's all for today. Fairly short and sweet. Hope you find that interesting and useful. I'm back with the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.